Greetings once again. Welcome to accounting tutorials for you. Today we are dealing with the calculations of depreciation. Before we go to the activity, you must remember there are two ways in which you can calculate depreciation. Depreciation can be calculated on cost, which is straight line method, or it can be calculated on the carrying value. When depreciation is calculated on the carrying value or book value, that depreciation method is called the diminishing or the reducing balance method. Now let's look at our activity and see how we can break it down. So we are given an extract of a trial balance whereby we are given our land and buildings, our vehicles at cost, our equipment at cost, and then we are given, the accumulated depreciation of both your vehicles and your equipment. Now look at, the key information on your accumulated depreciation. You can see it's at the beginning of the year. It is specific to say that those accumulated depreciation balances are at the beginning of the year, which means then those balances of your land and buildings, vehicles and equipment are at the end of the year unless you are told otherwise in the additional information. Now take note of this. Our year end is 31st December 2022. Now, as usual, what you are required to do is to update your balances of accumulated depreciation and your balances of your assets being land and buildings, vehicles, and equipment. And of course, you would update those balances using a note called property, plant, and equipment, or a note called note to tangible or fixed assets, formerly known as note 3 in secondary accounting. Let's now look at our, additional information. And then our additional information tells us that the company policy suggests that we must depreciate, number one, our vehicles at 25% on cost. Vehicles are depreciated at 25% on cost. Now we have to investigate, was there any new vehicle that was purchased? A new equipment was purchased for 15,000 rand on the 1st of August 2022, which means there's no new car that was purchased. So we just have to depreciate the cars that we have at the end of the year because it's the same amount of cars that we had at the beginning of the year. How do you calculate your depreciation? You're going to say the cost of 200,000 multiplied by 25 over 100. Right? If you like, you can say times 12 over 12 to depict that you had these cars for the whole year. Your depreciation amount for your vehicles for the year is going to be 50,000 rands. This is your depreciation for the current year for vehicles. Let's now go to our equipment. What does the accounting policy of the company say about depreciating our equipment? Equipment must be depreciated at 15% on the reducing balance method. Equipment must be calculated at 15% on the reducing balance method. So let's come and calculate our depreciation on our equipment. Look at this now. We have two types of equipment here. We have equipment that we had for the whole year, which is your old equipment, and then we have a new equipment that was purchased during the year. Right? Let's start by calculating for our old equipment. Old, right? For your old, we are going to say what now? You're going to say the cost that you have at the end of the year. Your cost is 60,000 rand. That cost is inclusive of the new one, right? So you're going to say 60,000 rands minus, how much is the cost of the new one? It's 15,000 rands minus 15,000 rands, which means your equipment at the beginning of the year, they were at a cost of 45,000 rands. Then now you have to, this is the cost, right? This is your cost. Now you are told the accounting policy says you must depreciate equipment at 15% on the reducing or diminishing balance method, which means on the carrying value, like I explained earlier. So you have to get the carrying value. Carrying value is what? It's the cost of the asset minus the accumulated depreciation of the asset. So the cost of these assets is 45,000. So you're going to say 45,000 minus, how much was the accumulated depreciation at the beginning? It was 15,000 rands. So minus 15,000 rands, which means your carrying value is what? Is going to be 30,000 rands. Then there's your carrying value now multiplied by what? The depreciation percentage is 15%. 15 over 100 multiplied by 12 over 12. Why are you multiplying by 12 over 12? Because these old ones, you had them for the whole year. None of them was sold during the year, so you had them for the whole year. And your depreciation for the old equipment is going to be how much? It's going to be 4,500 equals to 4,500. This is for the old. Then you go for the new. When you go for the new now, when you go for the new, how much is the cost of the new equipment? The new equipment was purchased for 15,000 rands. On which day? On the 1st of August. So you are now, when did this equipment be available and ready to be used by the business? It was available and ready to be used from the 1st of August until the end of the year. From August until December, from August 1st to be specific, until December 31st, how many months is that? August, September, October, November, December. That is 5 months. So you are going to say, therefore, 15,000 rands multiplied by 15 over 100 multiplied by 5 over 12. Your depreciation for the new one is going to be 438. It's going to be 438. Then when you are now accounting for the total depreciation expense, you are going to add the depreciation of the of the new equipment, the old equipment, and that of your vehicles. So here are the figures that you are going to focus on. You are going to focus on 4,500, the 438, and the 50,000 rands. Let's add them together. It's 50,000 rands plus 4,500 plus 438, which gives us a total depreciation for the year of 55,438. When you go now to your expenses under the, in the statement of profit and loss or in your income statement, you are going to have an expense called depreciation expense. Under your depreciation expense, you open your brackets, you add 50,000 together with 4,500 together with 438, then your total expense is going to be 55,438 for your depreciation. And that's how you account for your depreciation. In the next video, I'm going to show you how to depict such information in the note of property, plant and equipment, or your note to tangible assets. I'm going to show you in the next video. For now, thank you and bye.